How you going there, Pete? So just let me know if Joseph, how are you, mate? Just let me know if you can hear me, guys. Had to fiddle around with the it's the program OBS Studio which sends out the actual stream. Just make sure if I'm coming through okay. And on the side, I'm just watching the things thing. It's just open, so yeah, it popped as I thought. So it's a good little 50 points in that one there. That's good. MJ, how are you? All right, let's rip into it. Welcome to Trade Setup. Anyone that's new, yep, hope you're doing well. So the idea with the stream, live stream, is just to, it goes for about an hour generally. So if you can sit around for the whole lot, fantastic. If not, you can watch it later through our YouTube channel, which you'll see on the bottom right hand corner. Subscribe to us at Trade Setup capital AU, and you'll see all the old material. Now, if you're what we generally do is just go through. I'll go through for normally 30 minutes or so. My take on the markets, what's happening, what we're looking at. Generally, a macro overview. And everyone's used to looking at individual stocks, but if you don't have a macro overview, you can get caught on the sidelines, um, either in or out at the wrong time. So it's good to have a bit of a macro overview of what could be happening. So we'll be discussing that. What I see driving the markets, which is not much at the moment. There's no other reason. We'll talk about it a bit more. And then later on, I'll just open up to questions on what you want to look at. If there's any stock that you want to look at. So if you can't hang around, for the whole session, just put in the stock or something that you want to look at if you have to go, and then I'll go through it anyway. Okay, so that's generally the second half now. Generally stock related, but I'm happy to talk about anything generally from a technical perspective. And just remember, it's only a general advice. The general advice in which you will see on the screen there. We only talk about my ideas of what I see rather than any specific advice on what you should do. So take it with a grain of salt, really. I'll minimize that now, and we'll get into. I just want to go through the overall market. So here we go. That's the Hang Seng there. It's just a bit of a rocket there. Big gap down. So the markets, if you're watching them closely, they've the SPY took a bit of a turn for the worst. We had the ASX was expecting from Friday's close, but don't forget Friday was in the US, which it was easy to push the SPY up if you wanted to. Not me in particular, but if someone wanted to, with a bit of backing or a bit of volume, could have easily just tick that SPY up because the US was lightly traded. It was Thursday was their Thanksgiving Day, and generally they make it into a 4-day weekend. The markets have a shortened session on the Friday in the US. So not much lead from the US. It's mainly what's happening in Europe. Europe ended the week on a positive note. So did US, up a few points, pushed us up high into the close on the SPY futures, and obviously that's dragged the ASX open up about 30 points or so, and it's up 30 to 40, I think, at one stage, and it's a 60 or 70 point turnaround, and we just sold off. The overall index itself, and the reason why I was actually biased down from the open was the index. Now we'll just get that up. You can see, go to a 30-minute chart. We've had a bit of a good press higher day after day after day, good extension high, and we've only really, this is the first time today really we crossed the MA's crossed. So I normally look at the 20 and the 30. G'day, Bobby. The 20 and the 30 MA for a general direction. Okay, the exponential moving averages anyway. And it's the first time we've tested from below. And generally, markets, if they're going to go, if that's going to be strong, if you expect it to bounce, you'd expect it to bounce above the MA, keep the trend up, and then maybe consolidate. MA is sort of, a bit like this. They consolidate, sit on top of the MAs, and go again and have another good leg up. But once they cross below, you tend to pop up and retest, and then you have another leg lower. Even if it's, if it's a strong market, you generally just need, if it's stretched, which the ASX is on a daily basis, we just look at that, well and truly stretched on the upside. Basically, all of November has just been one charge higher. If you don't correct, it's going to have to reset. So markets will always, it needs to flush out some traders. Okay, so I guess that's the key. a key point. You need to flush out some traders, put them back on the sidelines. So this daily could just pull back to the MAs, say 64, 65, bounce off the MAs and have another leg up to all-time highs. I mean, you don't know. US has made it all-time highs. European markets have been going sideways, but everyone's going to be supported by stimulus. So we're going to talk about that in just a moment. But yeah, the ASX is the 30-minute chart. That's pretty much why I was biased down. I thought we'd probably, we might tag the MAs. I didn't think we would just pop up above, and then be a bit negative session. Just follow on from the last few sessions, because everyone would have been looking, strong open, buy into it, and then it's really just a retail trap. The way I look at it, retail open it, go to work, come back and look at it down 40 or 50 points as they get sold into. They put all the orders into buy in the open. They can't sit around like the pros and just watch the market all day. Get trapped and then squeeze out. And that's the way the market's just basically could grind lower. So that's what I was expecting. Didn't expect it to overshoot this way. We're down 41 at the moment. So basically, I think, we had the highs from the open of 41. Now we're trading at 60. So 40 to 60. What's that? 80 point, an 80 point turnaround. So it's a decent flush lower. Now, I think it's more macro, as in everyone's looking for a reason why the ASX is down. I know there's talk of China dragging the markets lower because of the argy-bargy that Australia's having with China. But I don't think so, because I think Nikkei got pounded on the open. The same thing, flushed up, got smacked. Hang Seng's actually open weaker, and it's bouncing at the moment back to where it closed Friday. US got knocked down, so we don't generally lead the markets in the Asian sessions at all. So it's to me, it sort of looks more like, the market's just in general flushing lower. No particular reason, just got to take some people out, like I was saying, clean them out, put them on the sidelines to rebuild the base and potentially go higher. Not saying that we're going to base out here, but that's what's going to happen. It just looks like on this daily, we're just having a bit of a pullback. It's your bit of a pullback, reset, and could go back up again. So potentially looking to hold the higher low. So yeah, good little flush today, it looks like at the moment. Just get onto the SPY, just show you what I was looking at in the SPY for anyone that's interested. I was biased down, like I think if you look at the morning note on the indices, we've got a 1 minute chart here, but biased down. I would have thought it would have had a bit of a better flush higher, but instead it didn't. It sort of popped down on the open, got a little support zone through here at 66.20 thereabouts, rallied off that. That's about when the market's fully open at 10:15. So that's when the ASX was finished opening, basically. I think it was 11 past. They finished opening, 10, 11 past. Finished opening up about 30 or so, and it's just been a drift down. So you can see lower highs holding, lower highs coming to support, chopped around, consolidated around support just on it, and started to fade through support. It's just been holding lower highs the whole way. And now we look like we're potentially going sideways. That selling pressure is running out of steam. Just go to a 5 minute, might be a bit clearer. But that's a decent effort. These are your days. That was Friday's low, and we pushed straight through Friday's low. So yeah, not too crash hot at the moment. It's been a good flush light. It's all one-way action at this stage. We'll see if we can have a bit of a bounce, but we just have to wait and see. I don't think, like I said, I'm not seeing news that's driving this market lower. It could be a bit of nervousness with China, but I don't particularly think so. China loves doing this sort of stuff. I mean, they've done it with the US. They always like to argue, threaten, this, that, and the other. Meanwhile, their companies are plugging away doing the same thing. Not really changing much. It's more hot air between the two nations. So it'll be interesting to see how that's taken. We've got what I feel in longer term. So we'll get on to what I was anticipating talking about today. I tend to get sidetracked. For anyone that's new, I get sidetracked quite easily. What I feel with indices, if you look at overall, so it's a macro, macro is really just a flow of money. Flow of money could go, and you look at, that's why currencies move. When you've got the flow of money, you've got to do with interest rates, where if you're going to flow into the US, you particularly want, you want that added bonus if you're going to buy into the US, lower rates, looking for the US to, they say, actually appreciate, and then you're selling once you sort of, this is longer term moves, the bigger flows of money from one area to another. you want to buy sort of in lower interest rate environments. If you're buying US dollars, that appreciates and you sell it at a high. But in the meantime, what do you do with the cash? You're going to invest it into an area where you're going to get yield. This is for your bigger macro funds, bigger movement of money. So generally, the markets are looking for yield. Okay, now you've got to ask yourself where's the only place that's got yield at the moment? If you've got the bigger funds and they're flowing into the US dollar, they're flowing into the bonds, trying to get yields on their funds. You're not really going to get it um, into bonds at the moment. I mean, that's globally. I mean, really interest rates are lower across the board. Low interest rates in Australia, low in the US and lower in Europe. Actually, what negative in Europe. So you're not going to get bang for your buck into or any yield um, into bonds or anything like that. Traditionally, people like to think gold. Gold's going down. You're not getting anything out of gold. No one's buying into gold as an investment tool. So really, to me, there's a few other bits and pieces, but generally, your bigger funds, you're not going to be mucking around. You could say cryptos. You're not really going to be putting. They don't put money into cryptos really. Um, it's still I guess, an immature market at the moment. So I don't expect that's going to be the case. So they're putting it into stocks, and that's why you're getting these valuations that are phenomenal, especially in the US. Same in Australia. I mean, Australian funds, where you're going to put if you're going to put it into bonds, no, low yield. Um, you're not putting it in there. You're basically putting it into shares at the moment. So going forward, the chances are that could sort of cap the US rally and in turn us and so on is inflation. Now, we've got another bout of coronavirus, which could crimp in the US, especially, really cap any appreciation or any inflationary pressures as they have to deal with, an out of control virus and lockdown, potentially further lockdowns. Whether they're going to go right into lockdown or not is a different story. You can see when there was talk about vaccines, go and have a look at the yields on the US 10-year bonds. They rallied, and now they're back to the square one again, because there's still there's two-story thing. You got the shorter term and the longer term. People, some are going to focus on the longer term, going, we've got a vaccine, we're all good. But the shorter term is that there's still problems in the US, and if people lose jobs, they're not going to get them back just because it's a virus. People are going to, companies are going to have to reset. So this short-term issues, I think, that's really pressuring the market, at least the US and in turn us, is I was going to say just the virus concern. So more lockdowns means people have potentially. Uh, I just think there's going to be a bout of job losses in the US, which is going to cause a few issues. So if all things work out well, they're still talking about a vaccine, I think, in December, released in December. Whether or not it's actually going to do anything, um, who knows? The market sort of had its good news, had its dose of good news on vaccines, and then reacted. Not so much stocks, but um, markets reacted down again. So stocks are still really the place to go. You know, yields are heading back up, well, heading down again. So bond prices in the US are going up. There's nothing in ours. Australian, the 10-year bonds are doing nothing. They're very, very low yields, so it's not worth the investment there. As long as um, the US market keeps getting supported with stimulus, that's if you've got to factor in what's the upside, what's the downside, what's the risk to the upside and downside. Um, the risk to the downside is these overvaluations in the US and they get smashed. Okay, but supporting that is just constant feed of stimulus. Keeps flowing into the US. So there will be more stimulus as long as it looks like it's teetering. At the moment, you've got this coronavirus problem. So the more the virus cases in the US keep escalating or the numbers keep going up, the more likelihood there's going to be a bigger than expected package for stimulus. And you can see that in the US dollar. US dollar was originally sort of hanging around that 92, 93 area because they're talking about a vaccine. This is before the numbers started getting really out of hand. Now the numbers are getting out of hand. In the short term, the US dollar is facing it, going, well, they're going to probably have to start a bigger stimulus package. So I don't think there's, I think Santa rally started 6 months ago. The Santa rally started back in March, when we had that massive flush lower. in March, and we've been going up since then. So I think he's been coming for a while, mate. Yeah, there you go, Bobby. So I think that's the case. If you keep, I mean, the market's been looking for time and time again why we should be sold off, and we're not. And I think it's that case of where else do funds, where else do you put money? Where does money flow to? I mean, like anyone, you don't really, you keep in the bank, you get nothing. Um, so bigger funds generally they just not keep it in the bank, but they invest into something that's going to give them yield that's safe, you know, and that's bonds. Bonds have been going up for a while. They've just there's not much left in them. Why would you want to be just parking? You might park that. They might park their money in there if there's going to be a big sell-off. But at the moment, like I said, where do you put your money? Um, it's in the equities at the moment. So the coming earnings in the US will be interesting because people are still. There might be a bit of a buy the room, sell the fact, but really the S&P as a whole is overvalued than historical levels, well overvalued. I don't know what figures it is, but they're well and truly overvalued. But that doesn't matter. It's still going high. You look at, we talked to COVID. So when in the US, go and look at the Dow. The Dow's pushing the all-time highs, hovering around there. Then they talk about the numbers keep going up. Okay, start to edge out of those and go back into your tech stocks because they're the performing stocks into the Nasdaq. If there's going to be lockdown, so there's going to be an area that's making money. If it's everything's looking good because of the vaccine, you go back into your cyclical stocks onto the Dow and the big S&P, not and potentially ease out of the Nasdaq, lock in some gains there. But if you're talking about lockdowns again because the numbers, COVID numbers are getting higher, then you start getting this flow back into the Nasdaq, which is soaking up, which is helping out the S&P as well, support the S&P. So there's really it's kind of one of those things. There's not really a lot of selling into shares into the US. There's not much into our market. We are seeing it's down today, but I don't think we're looking for. We're all trying to base it on news. I don't think it's news. It's just that turnover. I think market starts getting extended. You can only find so many buyers willing to dive in at the highs. The pros will stop buying at highs. They've already bought, and they'll be the ones selling. The market starts to come down, starts to find a base. They might get to back in and add to positions, or books and profits, add, re-add, books and profits, re-add, that kind of cycle. But you do need some heat to come out of the market first. If we just go there, and that's what I think this sort of pullback here. We're down nearly 50 points at the moment. And that it's not unexpected. If you think this market's just going to keep going up with green, green, green all the way, it does it on the downside, but you still get those days where good bounce. And on the daily, yep, you get a good bounce, and then the next day down, good bounce when it's sell off. But that's a complete what do you call it, market? Fear-based or fear-driven market. We're not fear-based now. They're probably the fear of missing out, but still, you're going to get those pullbacks, reset, go again. Pullback, reset, go again in an uptrend, and the same on the downtrend. As long as it's not that kind of downtrend, but that's just the general nature of the market. So I'm not thinking too much about the market going into panic. We've done this time and time and time again. If it was going to go into panic, it should have done it already. It's not. We're sort of really focusing on what the US is doing. Commodity prices, don't forget, help Australia. Aussie dollar's still popping higher. US dollar's weaker. It's going to support a higher Aussie. It's going to support better commodity prices, which in turn supports us, although we're not doing too well on the materials sector, and you've got metals and mining and resources are down today. What about IT's up? That's only because the Nasdaq was positive, but that's not really up. It's pretty much flat. Emerging companies don't really look at that. So gold stocks are copping it a bit today, which you would expect. We'll talk about gold if you want. Gold is, I don't think we're getting any love from that anytime soon. There we go. On a 5-minute chart, we'll just go to a 4-hourly chart. So you can see that we were talking about this level. I think recently you start to push through that zone there, and then it was going to be a bit of a stop hunt. And that's, actually, I'll go to a daily. The only level that was potentially going to provide some support, and that's pretty much, because we've had that uptrend consolidate again, moved to the MAs, extended that rally up. So now we've given up all these gains. We've come back down to that zone. That was just pushing into that zone. Consolidate for a couple of days, and then we've gone through. Really a bit of a stop hunt, okay? It's interesting to see. It will be interesting to see if we extend that. If we extend that, we've got to look at where, if you're a gold bug and you think that gold's heading higher, where could we, you've got to find support somewhere. The market's got to try to, push to a level where it's going to find some buying interest and some liquidity. Um, if that's the case and we are heading lower, then you keep grinding your way lower. So I think gold's looking at it, you got twofold. It was linked to the US dollar movements, but the US dollar's headed south and gold's headed south with it. So if that's the case, it's because gold's not factoring at all a safe haven bid into gold. People were looking at it. Um, any sort of pop, you get this safe haven, but it's not. It was just linked to the dollar. Now they seem to have decoupled a bit because the US dollar, like I said, is heading down along with gold. If US dollar was weak, you should get some sort of supported move into gold, but it's just not. There's no need to be in gold at the moment um, because it's, yeah, as an investment, it's not obviously not doing so well. And really, you've got other places to park your money into shares. So it's kind of like everyone's just not really worried about gold stocks or gold, physical gold as an investment, I guess, and just looking elsewhere, across the board into your typical your stocks in the US and Australia. So I don't think gold, if you're looking for a place where it could find support, potentially down at 1682, and that's not $100 lower. If that's the case, because we're just getting through, that really wasn't a support zone. It was just previously a zone where we spent a couple of days consolidating. So potentially that was going to go into there. We're going to get a lift off there, but you didn't want to see that price action like we saw go back to an hourly chart. You didn't want to see this. That there's just a sheer lack of buying. Any sort of pops, which is probably because sellers buying back, locking in some gains. Instead, you've got really the market headed sideways, started holding lower highs, and it was about here we're looking, okay, if you can't lift from here and you get a significant lift, a push higher, then there's no buying interest. If there's no buying interest, sooner or later that's going to run low and take out those stops, which it did on Friday. So from here, if we start to edge our way back into that zone from here, we start to lift, then that's not a bad sign. It was just a stop hunt, and we're going to try to reset above 1800. Okay, but if not, if we can't hold here and we do this kind of thing, and we start to get some weakness driving, then there's going to be another leg down. Okay, I don't know why they're so big, but does that make sense? So I'll just do this. This looks not making any sense. My arrow's a bit funny. So if we just sort of chop around below for too long, that means it's not really a stop hunt, and there's going to be potentially some more weakness coming to the market. And that's where we could start that move down. I think everyone's really waiting to see whether we get some buying interest. So if it was a stop hunt, you get that expansion leg down. As you can see that red candle. If it was a stop hunt, there should be some liquidity under there to buy it back up again. Okay, but if there's no one willing to buy it on there because they think it was just that stop hunt and we're going to bounce back again, then that will probably consolidate under the under 1800, for instance. And if we consolidate under and you're waiting for that bounce back and you bought it, you're gonna have to bail soon, and then you're gonna get that extra liquidity from sellers piling into the market, and that's probably where you could get that run down another $100 over time. Okay, so not that I'm saying that's going to happen, but that's where we're at the moment. Generally, with any sort of flush lower on stops, you tend to extend a level. If that's a level there, you tend to come into level, extend it, and then what we call back and fill as you retest it, and then you get buyers starting to lift again. Okay, and then you can get a nice little leg up. Okay, or it starts to get back up into the zone, which is back above 1800 in this case, consolidate, and then go back up again. So anyone who's shorted, you're going to get all these shorts that have entered the market below there, turn around and squeeze back out, and then it resets and goes up again, and they start to chase it back up. Okay, so that's I guess the mechanics of a stop run. So that's what we're looking for. Let's just get over to some stocks now. Potential stocks on the radar. Let me just turn over my sheet and then jump in if you like. Any questions, anything that you want to look at. So if there's something you want to look at now, currency, whatever. Actually, Bitcoin, I just want to touch on where Bitcoin was trading. I haven't looked at it again today. I was looking at this morning for potential buying it. Was it around here? Yeah, it was in that little pop and it's come back and retested, and we're popped up at the moment. So a couple of $100, which would have been nice, but I didn't trade that. It's just too early for me. I wasn't really fully awake by then. So Bitcoin's bouncing back. If you go back to Longer term though, we've got a, well, let me just see. Let's go to a daily, see if that daily trend up is still intact. It's a big move up here. Barely see that, can I? Yeah, look, the trend up is still intact. So you've got on the daily, we take it from this low because that was sort of the first. We come out of a bit of a base in the first pullback, higher low held, pull back another higher low held, high lows hold, bit of a flush lower, but held. You've got to be concerned now when we get this kind of move down over on a daily basis. That kind of action, I would look like more of a complex correction. Okay, so what I'd be looking for, I wouldn't just be buying up here on the daily. If I was going to buy here, like I was saying, if you're going to buy for the shorter term time frames, then you've got to be quick. You've got to know where your risk is if it does roll over, or you've got to book gains fairly quickly, and maybe have an outside a partial, take a partial and let the rest ride. But at the moment, what I'd be looking for is more of this kind of thing, a bit of a squeeze, hold some higher levels, and then once it starts expanding to the upside, then you're looking for that long entry. Okay, bit off. You want to see some more higher lows hold. You want to see a bit of a pullback. You're going to get that squeeze where lower highs, higher lows, squeeze, and then it breaks either down or up. I mean, I'm not saying it can break up, but that's if you're looking to go long off this daily chart. I want to see that clean out a few more buys, clean out, but showing some strength by consolidating that high and then going. I don't think this is just going to plow up through the highs here. Then you're starting to get a well and truly above the MAs again. So on a shorter term time frame, I think there's probably a bit of heat. We might come back up and test this zone potentially over time. Um, if that's the case, we test that breakout point test. If we can hold that, then it could be a little buy off that. Looking for an anticipation. We're going to trade back up to those highs at 9,500. So that's your Bitcoin. So Ethereum's much the same. It's had a big flush lower and it's reacted back up to these highs quite hard, and it's extended back into these highs. You don't really want to see a market extend back into the highs. You want to see some form of consolidation. If you're going to buy, you should have been down here or potentially off these pullbacks, but off your your lower term time frame. Now that we're up into these highs, up into this zone up here, you would want to, and this goes for when you're trading shares or anything, you might be thinking about taking a partial up here and see if you can run the risk below the most recent high or low on this leg up. And if it does pull back and we consolidate below, you're taking a partial, you consolidate, you can always re-add, anticipating a break up and through. But if not, we might pull back. This might be a key lower high. We might start to chop around here and start to find some weakness and then roll over and take out this low back down at 490. And that, like I said, goes for Bitcoin as well. What I'm looking at here, we're just going to get under a couple of stocks. I was playing around with today, having a look through. ARU, is it? ARU? Yep, this one. So the weekly is a bit choppy here, but what we are doing is holding a higher low on the weekly basis off that 9 cent mark, and we just got through 10 cents. So if you go back to the daily, what I'd like to see, this is holding up nicely, just below 10 cents. We just pushed through 10 cents through these recent highs at from the 19th through high of 11.5 cents. So what I'd be generally worried about is that 10 cent move. Generally, they play 10 cents, they play from below, they accumulate below, push it through, and then everyone takes that. People have to buy at 10 and a half or so, and you can get the match between 10 and 11. Sorry, 10 and a half. They go in between the bid, that crossing, and they just start easing out there. And it can a lot of the times it can come back down below 10, and then you've got that squeeze back down. I don't think this is the case here. I think it's doing quite nicely. It's holding higher lows, higher low, so it's doing well above 10 cents. So that's what you'd be looking for, is that push up to these highs. It's traded up to before 14 cents potentially. Okay, good volume today. I just want to see a bit of a pullback, maybe 10 and a half. If it can hold 10 and a half, then it could be worth buying for that move up through 11 and 12 towards 14. But definitely the trend is up. Okay. could I just put you on hold for a second there, guys? Just one tick. Someone's knocking at the door. Just be 1 second there. Okay, back. Sorry about that. Yes, that was one. I'll just go through a couple. Let me just get that. I like the way it's pushed through that zone there, and that was in Feb. So that's when things were sort of free falling there. It's come back and tested that level here. So this is what we were saying before when you do a bit of a stop run. Not that that's perfect, but you get this kind of push back up, retest the zone, it takes off, and then after it takes out a few stops, or just cleans out a few people. And then we've got this move up through 30, expanded up through 30, and you can see this chop. So it's always good to see expansion up, and then you start to get this kind of price action like that. It grinds its way down. That's not strong from a seller's point of view. It's strong from a buyer's point of view. You can get this buyers just soaking up on the way down. Sooner or later, it runs out of selling pressure. So if you're buying it off this support around 15, 16, and you got into these highs and you started chopping down, you're going to be more than likely looking to edge out and book some gains. Because, it's, depending on what's happening with the markets, the global markets could be just that fear running through you. And a lot of people will always, I mean, I'll do it a lot myself. The overall market's not looking good. I'd rather be book some gains than watch it evaporate. Okay, it doesn't matter what my conviction is. I will look to take a partial, and I think that's you get that extended move up when you really haven't had to worry about any resistance coming in. First form of resistance would have been around 30. It blasted through there, traded up through, went straight through. But then the way it's grinding back down again, it's just going to take out some, take out some of these buys through here. So you're looking essentially just at that leg up. Okay, so this is what we've spoken about many times before. If you consolidate in that top half of that, or the top third of that leg up, say from 15 to, was it about 38, thereabouts, up here, the top third is quite a good strong move. Okay, to me, it's saying that there's more to come. So that's why I like it. And what we've done on I am on the daily, I think. I'm pretty sure I'm on the weekly, sorry. On the weekly, we're consolidating off the MAs as well. So really what it was, it's looking really good. We've got that extension higher. You get, it's like anything. You can only stretch an elastic band so far before it has to come back to where we say the average. Okay, so you're stretching up, you're going to come back. And if people are happy to get back in off these MAs and not let it fall so much, so it's showing that there's buying interest when you're in that top third. Okay, the buying pressure's still there. They still think it's going to go, we're looking potentially up to 70 cents. Then I think this is a good little opportunity. And if we go down to the daily, you can see that it's a lot clearer. We've got that extension higher up through 30, that resistance zone through 30, plowed up and through, chopped around. Essentially, you sort of pulled back and then went sideways. We've just taken out these lows. You can see the lows through here. Low, low, low. What was that? That low was 28. Took it out with this little flush down, and then we've held again. We're starting to lift. So for me, if I can see, what I was concerned about is if we're going to trade up to 70, sorry, 30, what was that? 30, high 32, and do a double top, well, retest fail, we like to say, touch it like we did here and then sell off. I was worried that we are going to touch there. Now that we've taken out that level, to me, it's a bit of a heads up. Now, what I would ideally like to see just to finish that setup from a daily basis is a pullback and get soaked up at a higher level, say around 30, 31. We start to soak that up, buyers soak it up at a higher level, and we get our first real high low to work from, then I think that's going to be the start of potentially another leg up like this, which could be, what's that, 20 cents? 20 cents from 27 essentially could be around 47, 50 cents. So if we can get something on board, something like that, I think that could be a good little payout. But that's so that's JRV. I think didn't realize it kicked on a few percent. Enough liquidity here. Someone's just went through 75 grand. Someone's just jumping into there. All right, so that's another one. FX was one. Whoops. Did it again. That's not X. FX was one that, I mean, structurally looks really, really good. Okay, it's not as big. You're doing under 100 mil market cap, 67. Done nearly 2 mil today. It's a big volume today. What was the news out? Really nothing. Go and look at the structure on a weekly. You've got popped up, pull back, start of the year like everything else. It's had a good run up. So obviously there's been news that's backed that move up through 10, went straight through 10, come back, pull back, hold that 12 mark on the weekly and start to lift again. So I would like more of a pullback, hold 16. If they can get soaked up at 16 cents, then it could be a go up for a move up and through 20 and so on. Okay, so that's another good one. RUL is one that I can't even say, RPM Global Holdings, which doesn't look so crash hot in that daily, but the weekly, a big flush lower and it started to hold. Let me just see what they do. The problem is if we have a pullback, it's probably going to be related. Software and services technology. Software as a service. Yeah, we'll see it's into the mining software related services on a global basis. Software advisory and geogas, whatever that is. Okay, because I don't understand, we'll just stick to this. It's looking, technically it's still looking quite good. And I like the way it's pushed up here into the start of this year. We got the big sell-off in Feb, March. It's flushed out a lot of traders that would have held it on that leg up, and they've been building again. So it's bounced back. It's consolidated through here on just above 90, and then it's had that pullback to about $1, and it's been building again. So if we can get basically something, we've had that. Oh, let me just show you. If I can get, we're talking about this high here, and this support through around 90 cents. It's about a leg up, big flush down. That's that leg down here. We've gone just below the highs, and what we've done is just chopped around here, held that 90 level, got through the previous highs and failed, but every time it's looked like it's not quite set to go again. It got through those highs, and then we failed back again, back into around one. We're back, so we're roughly about here, this little leg up. If I can get something that consolidates and we just hold a few minor lower highs, something like that, then I think that breakout is going to have a bit of oomph to it. I think that could be quite good to lift it, but you just want to see the buys. I don't think it's going to get out of hand and just trade up through 35 now. I think it's just got to do a bit more work for me, prove to me that it's going to hold a higher level. When it's a good solid trend up here, that it can hold a higher level, and we get this kind of action. All right, we start to come back to the MAs, get soaked up around 115 or so, and then for a few days, spend a few days there, see some of the volume pick up, and then take the breakout if you can. Okay, so that's what I'd be looking for on RUL. It's not much. A bit energy was another one we just posted today. That's not really looking too crash out there, but same sort of thing. It had a big flush lower in Feb, March. Along with the rest of the market, it's been soaked up. With this move down the market, you would have thought, okay, we're going to get smashed down here. If it was really weak and it was rubbish, for whatever reason, it should have gone back down through 40. But instead, it started getting soaked up here at 40 cents or 60 cents. Sorry, again at 70. You got that pop up to these highs. We could see this zone through here, pushed back up into that zone, consolidated sideways again. So good sign. Took it out. So took out any resistance it might have had there. And then since then, it's just been holding some higher lows, extending up. Good pullback here, the end of last month, but it's been soaked up again. So we've got some support through around that 90 to 95 mark through here. And if we can hold, what I really want to see is hold above $1.10. But I want to see, again, it's a lot like the last one, RUL. If you can consolidate around it without taking out 120, 120 is a bit of a headwind at the moment. without taking out 120, if it can sit there and consolidate for a couple of days and we see a bit more volume come in, then I think the break will have a bit more oomph to it. It won't just spike up and come straight back down again. Okay, so I think that's quite good on bid. And that's pretty much it. P&R is one other that I like the look of, if I can get it up. Look, let's just go back. There we go. P&R is more, I mean, that's it's coming down, obviously, but that's more of a correction of this leg up. So what we're doing, you have that holding higher lows, it runs out of steam, you've got the correction lower. That's a complex correction lower, okay? So really on the weekly basis, it's one leg up, pull back. So if you look on a weekly, we've had a leg up here, we're pulling back and we're looking for a secondary leg up on the weekly. Okay, so back to the daily. I really do want to see it hold up around the 18.5, 18 level. I mean, if it fades and we jam through there now, it's not such a good sign. But from here, I think it's quite good. And there's a couple of little reasons. And taking note of a few different things. That's your support through there. And you can see it's quite clearly touched a few times. Touched it back in, was it June? June, which was that low. Touched it again here. Flushed it out here and then retested. So if you're going to flush it lower and finish back above, and then we test it again, to me, it's a bit of strength coming into that market. But it really just needs to, maybe it's compressing a bit more. It's not set to go, not ready to go. For me, at this stage, the high is at 22 is the key level. We start to get and test 22 from here. We're no longer in a, because at the moment we're in a downtrend, down, holding lower highs. We've been held up at 18.5, but if we go to 22, it looks like that contraction lower. Okay, that's your major leg up. It's not even the same color, is it? Let me just get back to pink. So this is your weekly move up. We're contracting and we're looking for that secondary move up. So if we start to find that is the line in the sand at 18.5, we're holding up well. A test of 22 means that we're probably coming out of that contractive. We could go sideways, but what you'd be looking for from there is that, okay, the contraction's over. We're looking to build for a new leg up. Okay, so we'll just see how that goes. All right, let's get onto some stocks. I'm getting sidetracked on what I'm looking at, but so we got Joseph had a few. Where are we? SHO. Looking good just on that daily basis. Yeah, there's not much to look at on a weekly. Even on a weekly, you're just starting to get above or above the 20. I like to see the 20 and the 50 cross for an uptrend, okay? And then the first pullback when they're crossing. So the 20 is above the 50. It's expanded higher. You get your first pullback. What happens on the first pullback? It gets supported, then you buy into that first pullback when the 20 is above the 50. At the moment, the 20 is not above the 50 on the weekly. On the daily, it's looking a bit more positive. Okay, 20 is above the 50. You can see that rejection at 4, which is not the world's best sign. But if it keeps getting soaked up here, that's, we've come off lows here. I don't even know what the price is, quite low. Went sideways, keep testing and held it up above 2. We're looking like we're potentially holding above 3, which is that same zone. All right, just got to draw that up. So we've held up here, broke out through 3. We've come back and we're testing 3. So as long as 3 holds up, you just got to pick your entry. Really, we're holding up off the MAs. Potentially, you got to know where your risk is, I guess. But I think the way it's been forced down off 4 is a bit of an issue. But technically, it's holding up quite nicely. You've got that uptrend there. Maybe it needs a bit of work. If we do a bit of work and we start to break out, then yeah, it's on its way up. But definitely, just from that point there, it's in an uptrend. It's looking quite good. It's holding the MAs nicely. Bit of volume come through. That volume was on a down day. Big volume here on a down day, I think. Red candle, but held up in 3. So it was getting soaked up. As long as it keeps getting soaked up and we've got that volume coming off and it holds up, we'll probably find that volume will lift on a rise. Okay, so that's looking good. PDN, Paladin. Daily is not too crash hot. Spent a lot of time really going sideways. We're just starting to lift now on the weekly basis anyway, but nothing that stands out. I don't like the way it comes down. We come down, we take out a level, and then bang, up we go. So it's kind of a tougher one to trade. But it's definitely this price action. You've still got deeper correction, so you're looking at each individual leg on the way up. which would mean that that is your leg up, pullback, leg up. So the pullbacks, if you're looking through this, that's your from low to high, pullback roughly about 50%, probably give or take around 50%. This pullback is over 50%. Does that make sense? So it's more like a 60% pullback of that leg up there before we started to lift again. So it's not that alone is not super strong. And the volume on the daily is kind of petered out. It's not doing a hell of a lot. We've done half a mil roughly today. So what I'd rather see for a bigger, better, stronger move up, because I think this kind of thing you're gonna have to buy here in anticipation that we get up through the highs, but then if it's doing what it's going to do in the past, it's going to be quite a deep correction. So you probably want to see it. If we jam through this high here, 18 cents, it might go to 20 or thereabouts, and then we have a deeper correction. What are you going to do with that? You're going to hold your stops below 11, quite wide risk there, or you're going to hold it tight, re-enter, or take a partial then re-enter. So just have a plan of attack before you jump in. But it is on the rise here. That price action there is not. I don't love it too much either, to be honest. I think that's what we're seeing here in this price action. So it's had too many pullbacks, and we're not even near those highs at 18. What you want to see is this kind of action to jam up the pullbacks, and then you get your first pullback. Instead, we're grinding up more than anything else. A grind up means you're running into some selling pressure. Simple. So to me, I'd personally steer clear of that for now. The weekly volume is easing off, and we haven't got up to this high just yet. So we're sort of running out of steam before we get up to those highs around 17, 18 or so. So if we can, as long as we hold above 10, we might have to do some work still. If we can hold above 10 and chop around, mainly looking at the daily, we chop around here without getting up to 18, then that could be a better base to work from. Okay, but we'll just see how it goes. PDN, ADV. For me, this one, we've had this big run up, obviously up to 5 cents. That's where it's rejected from before. We rejected. Now the rejection is the thing to note. When you have, if it's a super strong market and there's a reason why it should be a lot higher, it should be doing it rather than getting to 5 and then basically halving in price over a few days. So this rally here, it's given up a lot. To me, I would be questioning. It's only a small cap, 42 mil. It's done a bit of volume, not a lot. I'd be questioning whether, it's my first reaction. No one takes offense. Is it a pump and dump? Okay, has it been pumped up and then it's got to 14 when someone's unloaded on it, and now there's no other reason to be in it? And it's taken out this, so we can see this high low here, had it pushed up, consolidated through these lows at around just above 1 cent, had another push up, consolidated around, was it 2 point, what was that low? 2.3, and we've had that extension high, drove up, and we come straight back down again. We've just taken out that low. So that's my biggest concern. To be in it, if I wanted to be in it, I want to see it consolidate. I don't want to see it go lower. If it goes too much lower, then there's, what's the reason why it was up there in the first place? To me, it's probably, like I'd have to say, probably a pump and dump. Pump it up, dump into it. Or, I guess there's not much more to say about it, but that's what I'll be looking for. If it was a strong stock and there's every fundamental reason why it should be up there, these pullbacks should be supported with volume, supported with some buyers, okay? Betterment. I'm not sure what you're talking about there, better bypass. Anyway, ADV, TSO. So it's holding up nicely, just above 25, 26. You don't really want to see that go there. So what I'd want to see from here, we're talking about this leg up. So it's had a good leg up. You can see it goes near vertical. When it goes near vertical, it's sooner or later there's going to be some profit taken. It's going to run out of steam, and it's done that. So what we're looking at is this going to be a complex correction. Are we going to start to hold up? We're going to build a bit of a base around that 25 mark through here. It's still holding lower highs into the level, so there's a chance it can break through when you get a deeper correction. And then we have to just assess what's going on from there. If I just draw that up, let me just take that back. That's what sort of looking at there. That's potentially breaking down. So to me, that's what I was saying. It's more of a complex correction. So really, are we going to hold up through this zone through here? We could get through there, but I don't want to see it go straight down to test these levels, because I think that becomes a deep correction. It's given up a lot of those gains. And why is it giving up a lot of those gains? It's lacking conviction from buyers. It's that simple. Okay, if it's lacking conviction from buyers, why? I'm not too worried about the fundamentals of it. What I'm worried about is if everyone else has done their research and they're selling it, why are they selling it? I'd rather be out than in. Okay, so for me, I'll be looking for that. That move down there. I want to see that hold at 25. So let's just take that as a level. So that's the highs there. That's what we're looking at. I want to see it come back into that 25. Don't mind if it flushes out, but I want to see if it reclaim that. I want to see any sort of push into that zone soaked up. Okay, that means to me that, okay, that is a level to work from. There's other buyers willing to buy it off that level as well, and it's just a matter of time before it starts to lift back up and we start to get that trend back up we can take advantage of into your higher lows. Okay, but really it's gonna be when a market, just take one step back. Once the market's had a run up, that's a trend up, failed. Okay, so now we're starting to get complex correction. A complex correction is either just going to keep going down, or it's going to come to the point where the next move is consolidating, sideways action or range bound action. So you don't just buy it into range bound because it could range and then drop off again and get sold off. What you want to do is you want to be buying into the rise. So once that range bound action starts to break and you get to break up, takes out a key sort of resistance level, and it starts to, the pullbacks are getting soaked up at higher levels, that's when you want to get in. So that's sort of from that move onwards is where you want to be long, because you're riding with the trend. You're not trying to anticipate it go up. And when you're anticipating it going, it's your ego saying, I believe in it, da da da, and I buy it off the lows. I mean, if you go and trade indices like that, you get crucified time and time again. If you anticipate that it's going to hold a level and you're not buying with the move, okay, you're not going with the flow as such. You're not buying when it's more known. Okay, so if we can get that sort of action, I think we might have to have some consolidation. So we're about here at the moment. Yeah, give or take. Wouldn't mind seeing a bit more consolidation above 25, go sideways, lower highs come into play, lower highs, and then the lower high get broken and potentially look for your first pullback to buy into. Okay, so that's that one there. That was TSO. We'll get on to IMM. It's heading south for now. I don't like the fact that, we've had a big spike up. We've just drifted lower. So it's probably waiting for news. It's not there yet. Had a bit of a push up here. It's been drifting lower. So just for the way it drifts lower, and then you get these sort of spike up news, and it's getting sold back into. Okay, that from the weekly. It's getting sold back into here. And that's not a good sign. It means that people are not willing to hold it for too long. Maybe the news is not good enough. News looks great when it comes out and you get these spikes, but then someone's using the spike to sell into and get out. Okay, so the way it's grinding up is not such a great thing, and it got hit quite hard. And I guess that was in March as well. It's repairing itself at the moment. You can see that line in the sand, Pete, is you can see through here, it's sort of retesting at 22. You've got through 22, pull back, retest. We're starting to work our way back up and off. It did fail again at the highs. It's just backing off from those highs. So it needs to contract. If it's going to contract, you don't want to see it. Essentially, you don't want to see it trade down to 25 from here, because I think that could end up being a lower high. Presses back down to 22, could even break 22. Okay, so if we can start to get up through 27.5 through here, then you might find it gets to 30 again. I might get a bit straighter. It gets up there again. We have a bit of a pullback, but at a higher level, and we start to do this sort of thing until it breaks up and through. Because to me, it's more likely to break up through that sort of price action when it's traded off a level a few times than when it's traded into a support zone for a few times. I think that could hold. Okay, but on the upside, people are selling at a certain level because stocks basically go up. They're geared to go up. So if that's the case, and we could sort of pop up through and it's getting soaked up at higher levels each time, then it's only a matter of time really. It probably breaks up and through 30, and then you start potentially looking towards 42, 42 and a half, 45. These highs back up here. Okay, so that was that one. BGA, I hate it. I was intraday trading BGA the other day, sort of Friday. That news come out, I was shorting it, and I think I had 2 wins and a loss, and I was break even. When I sold it initially, it just didn't go down, so I took a small gain. Sold it, pretty much got stopped out straight away. It turned around and went straight back up. I stopped myself out, so that the loss was obviously a lot bigger. And the third attempt, I thought it was definitely going to give us some, a good move on the downside. It just kept getting soaked up, so I bailed again into a small gain. It ended up being, like I said, a flat day. It was no gains. It was basically neutral over three trades. So my risk reward didn't play out very well. I would have expected after that kind of news, and when the market was down, a bit deeper correction, to close that gap. So I was shorting it around the 550. There was a big offer. You'll see there was an offer at 550, and every time it sort of drifted up there, it was getting hit. Problem is, every time it come down, it's getting soaked up at higher levels, and you can see them smashing it back up again. So someone wanted to protect that, protect the gains. Don't know why. I mean, you can read into it anything, but on you go to a weekly, it's been grinding its way back up. I was bullish on this. I just didn't want it. We had a buy entry which would have got triggered on Friday. I just did not expect after doing that capital raise, and I guess they bought, they did do okay. What was it they bought? I don't know what they bought. Something somewhere. They're looking to expand overseas. So I think it's potentially a big positive. But I thought in the short term we might get a pullback, and then we could look to reassess it and buy. And then it's still not off the cards because the way it's rejecting through the high at 553, and that's hence why there was a big offer there at 550 just to try to cap it. We pushed up to today 578, which is backing off now. Trend is still up on the weekly. So you're looking at your daily, you got your high lows here, most recent high low. So if you're long, you probably want your risk just below 480 for now. Whether it's wide risk, for you at the moment, fair enough. If you got stopped into a trade on that gap up, Lions Dairy, that was the one. So I guess it's a income producing, which is a good asset to buy. Rather you're buying something where the miners do they buy, at least it's just costing them money. They've got to raise capital. Buying income generating is good. And they funded it with a cap raise, I think, which was taken up quite well. So all in all, it's probably a good thing. I just thought, like I said, would have had a decent pullback. Could have got 10, 20 cents or so I was looking for, maybe a bit more on the short side, but instead I was just took, I think, 5, 6 cents and another 5 or 6 cents and lost 12 or thereabouts, 10 to 12 cents. So it didn't really go anywhere on the downside, which means it's finding a bit of strength still. I still think there's going to be a bit of a pullback just to flush out some of these buyers that bought it on the open, clean them out a bit, maybe get 520, 30, and then start to hold. As long as it holds roughly above that 490 area, if it comes back into 490 and tests 490, not such a good sign. Yeah, we'll see how that goes, Gino. CLA, it's wouldn't buy it where it is because obviously it's getting rejected. So you're finding a bit of that wiki price action. When I say wick, it gets rejected again today potentially. Not massive volume. On that day, it got rejected on fairly decent volume on the 24th of November. But in saying that, it's a definite uptrend. Okay, so it's just saw your comment, Pete, been holding IMM for a while. Not to worry, mate. If we, I just want to draw that and get rid of those MAs. That's not really showing it. So the weekly's not really. Look, it's lifting on the weekly. It's just finding a bit of selling pressure up towards those highs. Whether it's just someone, like I said, they've been holding it for a while. It gets in a bit of a spike. They just cut their losses, or you minimize their losses or something. But either way, that's starting to lift. I don't know what's driving it on the news side. Some good volume when it had a bit of a run up here. That was unusual. It wasn't backed up with too much more volume after that holding. So you really want to see a couple of good days of volume and it getting soaked up. So either way, if it pulls back to say 4, we get back down to 4 and it starts to lift again, yeah, it's looking good because it's still in an uptrend on the daily. And then you really don't, it's sort of clear skies until you get 6.5, 7 cents up to the previous highs. Just drop it out a bit up to these highs. sort of clear skies. There's not really any resistance that would come in potentially around about the 5 mark, and that's probably what these guys are looking at. It's just popped it towards 5. They sold it back down. But either way, it's like I said, it's holding up okay. All right, that's probably call it a day there, guys. It's been an hour or so. We got through everything. Hope that's just reading a few comments. Nothing else yet. We got through everything. That's all good. Market's down 53 at the moment. Like I said, maybe we're just getting it's just quieting down a bit now. Look at the ASX 5-minute chart. Well, it looks still in a downtrend. That's a bit of a savage sell-off. So you'd think it's going to start to. We might just get a bit of a bounce into the close, but at the moment it's just been all one-way action on the downside. So we'll see what happens tonight in the US. What they do. That's the 30-minute chart. We've just, like I said, that's your first leg down. That's your first pullback to the MAs. MAs are down, rolling over. That's the extension down. Where we're going to come into maybe find some support at 65. We bounced off that level just what was a couple of days ago on the 19th, and we're trading around there on the 17th. We'll see if maybe that provides some support, or maybe where it is at the moment. But we could have another. We could bounce in the close, rally on the open tomorrow, and then sell off again. We'll just have to wait and see what happens tonight. All right, that's all I wanted to go over. Any questions, feel free to send us an email, support@tradesetup.com.au. Thanks for joining me. Great if you can leave us a like and help us spread the word a bit on the YouTube channel. If you're not in there, subscribe. More bits and pieces coming through, hopefully in the near term. And have a good day. We'll speak to you again Monday next week. All right, guys, enjoy, and we'll speak to you again soon. Bye.